What's going on, guys? Welcome back to the channel. Talking about investing once again. Today we're going to see 6 different ways you can smartly invest your money in 2020. So I get a lot of questions from people close to me asking me why they should invest their money rather than put it in a safe savings account. The answer to that is simple. If you put your money in a savings account, basically you're losing money over the years due to inflation. Your money is losing value as opposed to making money for you, which you can be doing if you wisely invest your money. Investing your money allows you to make returns on your money that you wouldn't make in a regular savings account. Most savings accounts give you a very low interest rate of return on your money, basically nothing, which doesn't even keep you up with inflation. Investing your money properly will allow you to reach your financial goals, whether that be buying a house, buying a car, opening up a business, paying for college. Investing your money will go a great way in reaching those goals. Don't allow your money to lose value sitting in a savings account. Number one, the first way I would suggest you invest your money: an emergency fund. An emergency fund is exactly what it says. It's a fund for emergencies. An emergency fund gives you a safety net just in case anything comes up, such as medical expenses, car breaking down, air conditioning in your house breaking down, which has happened to me before. An emergency fund allows you to have a fallback onto something you can use to pay for those debts. Usually in an emergency fund, you want to have about 3 to 6 months worth of your expenses. So for example, if your bills are about $2,000 a month, you want to have $6,000 to $12,000 in your emergency fund. Now, emergency funds must be kept in an account where it is extremely liquid. That means you could have the money on hand if you need it the next day. You don't want to be waiting 5 to 7 business days to have the money in your hands to be able to pay for something that's an emergency. I would suggest finding a savings account that gives you at least 1.7% return on your money. Number two, pay down any high interest debt you have. I would consider anything above 4.5% interest a high interest debt. Paying down a high interest debt saves you a lot of money in the long term, and it frees up a lot more money for you to invest later on. Number three, investing in retirement accounts. Now, if you don't already have a retirement account, I would suggest getting one. The first one I'm going to talk about is the Roth IRA. A Roth IRA is a retirement account that you fund with money that's already been taxed. The good thing about that is that when you take it out when you're 59 and a half years old, you don't have to pay taxes on that money again. That allows it to grow entirely tax-free in your Roth IRA. Now, you're only able to put up to $6,000 a year in your Roth IRA. So you might have some money left over either to invest in the stock market, index funds, or even open up a 401k. The good thing about a Roth IRA is that you're able to withdraw your contributions penalty-free at any time you need them. Another type of retirement account is a 401k. A 401k is funded with pre-tax dollars. That means you have not paid taxes on that money yet. The thing about 401ks is you do have to pay taxes on that once you decide to take it out after you retire. Many employers provide what's called an employee 401k match. That's when they match the amount that the employee puts in their 401k with their amount. I would suggest taking advantage of the 401k match from your employer and maxing it out to its potential. Number four, high interest savings, CDs, and bonds. High interest savings allow your money to grow entirely risk-free. There's no risk in putting your money in a high interest savings, although the reward is not as big as the stock market or investing in index funds or anything like that. I would suggest putting your money in a savings account that gives you 1.7% or higher on your money. No risk, small reward. Putting your money in a CD will give you 1.8 to 2.5% return on your money. This is only a good option for people who won't be needing their money anytime soon. CDs will lock up your money for quite a bit of time, but it's also a risk-free investment. Bonds are a little riskier, but they are safe. They go up and down. They're basically an IOU from a city or state government. Bonds will give you a rate of return anywhere from 3 to 5%. Number five, index funds. Index funds are simple. They track the overall market. No research is required on your part, no studying companies. You just invest in the index fund and watch it grow. Although index funds are a little riskier, they do go up and down, but overall they've consistently shown growth over the years. The good thing about index funds is they provide diversification to your portfolio. For example, the S&P 500 gives you a small portion of 500 different companies. In my opinion, it's the best risk versus reward of all these options. And finally, number six, individual stocks. This is the riskiest. Investing in individual stocks is high risk, but it's very high reward as well. Having all your money invested into a few stocks is very risky. You do have to do your diligent research on which companies to invest your money in. Remember, you don't want to be gambling with your money either. It's important to do your research and pick companies carefully. If you have all your funds caught up in one company and that company goes down, there is a chance you lose all your money. There's a lot of research out there provided for you all. As long as you do your proper research, you'll be fine. A real simple way to get started investing in the stock market is using the Robinhood app. The Robinhood app is extremely user-friendly, super simple to use, and great for beginner investors. If you're interested in making an account, click the link down below, You'll get a free stock to start yourself off, and I'll get a free stock as well. Good luck to all you investors out there. Let me know how it's going for you all. Give this video a thumbs up. Thanks for watching, guys.